Hey there. In today's video, we're going to talk about the controversial topic of growth. I want growth. I need growth, 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 growth. And we'll talk about a way to possibly get that in a responsible, repeatable way. That sounds exciting. Now, first thing up is we're going to talk about growth. Yes, obviously, if our accounts get bigger, if they grow, that's a good thing. We have more money, we can retire, which is another thing we probably shouldn't aspire to. We should probably try to find things we like to do no matter what age we are, but everybody wants growth. And I'm just wondering, as the years roll by, should this be what we're thinking about truly? At any rate, look at this portfolio recap. This is as of this week that I'm making this video, and this is the 40 in, 20 out, and this is purely based on growth. It's a trend following portfolio. What is trend following? It's just for growth. The maximum amount of growth possible. That's what trend following is. Okay? And this one has been going on for years. It's free. You can sign up for their paid service or whatever. But it's all futures. It's all growth. It had triple digits growth in the past 5 years when COVID hit and all that. But here's how it's doing this year. This year has been kind of a doozy, but it's down 8.95%. So when you go for growth and you need to pay bills every month to live your everyday life, yikes. Going for growth, in this particular circumstance, of course, is not good. But what if we go for growth in high, powerful, possibly 10 baggers, right? BHVN. Don't know if you know it. It's semi-popular in the growth world. And look at this. This is what we want. This is what everybody on Reddit goes for. But what about that? Okay. Do we ever talk about that? Do we think about that? How do I pay my mortgage in that? Right? I'm just throwing this out there. If you bought around here, 22, where are you at? You're getting smoked if you bought and held. Now, are there trading techniques? Of course. Of course. But is that good? Right? It would be up overall on a buy and hold. But if you bought up here, we are in serious trouble. And when you go for growth, that's possible, right? Growth is good. Here's AIFU. Wow. Look at that. 100 to what? 700? And then back down to what's that say? 5. Okay. Wow. If you held this in your bank account since 2016-17, you're getting smoked. How's retirement looking there? We got the growth. What do I do then? All right. Okay, well, I could have sold here. Well, then am I getting back in here for a massive loss? Well, what if I cut my losses? Well, if you cut your losses, you're getting absolutely destroyed all the way down. If you go for growth, that can happen, right? Or what about famous Chewy? Everybody loves their pets. Everybody wants Chewy. And in 2020, look at that. When everyone's staying home, that is massive. That's life-changing. That's what everything is all about until this happens. You buy and hold that. How are we doing? Is this really the roller coaster I want to use for the rest of my life? This is how I'm going to pay my bills? From 120 down to 10? And of course, here's my favorite example, Peloton during the pandemic. And look at it now. Buy and hold that again, right? Lots of examples. I'm just trying to make a point. If we want growth, we need to be careful what we wish for, okay? There's a whole argument against growth if you really want to change your life, okay? But that's not what this video is going to finish talking about. We're going to talk about growth that actually works. Instead of buying and holding and HODLing or having diamond hands or buying GameStop and now being down for years and years and years, how do we possibly get growth in a systematic way? Well, let's do it responsibly. Assuming you want it, which I can make the argument that maybe we don't. But anyway, how can we get growth repetitively? Think about this. Great is easy. One lucky stock pick that you found online or just happen to throw a dart at, and it goes up. It's easy. Steve Martin used to say that. Great book. In his autobiography, he talks about this exactly, that any comedian can go up and be great for a night. It's the person that is good every day that is extraordinary. Meaning, we want a portfolio that grows repetitively, systematically, Not just, oh, we caught a couple of lucky ones and then here we go. So that's what I'm looking for. Good over a long period of time, not great by luck. Okay. And thus I give you the Tiny Titans scanned portfolio. This is a scan. All right. We'll explain it. And look, I'll just show you the screen. Now, this comes from their promotional materials. So take it for what it's worth. Pretty reputable, right? Place, but in O'Shaughnessy is extremely reputable. But this little portfolio, if you did a systematic every month, rebalance every month, if you can see it way over here, it's just over 30,000% gain since 1998. 30,000. That's a lot, right? That beats the market so bad that it can't. This line doesn't even show up. The market's like 500-600%. 30,600. That, my friends, is a beating. Okay, Jim O'Shaughnessy, if you know him, What Works on Wall Street, very famous books. I've gone through them, gone through his new ones, love them all. He does his work, does his research, and his stuff is good stuff. Okay, he's the one. You want to have stock screens that you can repeat? Go to Jim O'Shaughnessy. Okay, years ago, he created the Tiny Titans, and he was just going for growth. He went back in time, what grows the most, and this is what he came up with. Small caps. It's the small companies. It's Apple in 2003, 2004, right? It's Amazon in 1999, assuming you can take the 80% drawdown. That sort of thing. They started as small caps. Plus, he wants good value. He doesn't just want them to be in the stratosphere. He wants them to be a little bit selling at a discount. And then he also wants recent momentum, which seems weird to be a good deal while it's still positive lately, but that's what he goes for with this Tiny Titan screen. Now, if you want the exact screen with all the details, I'm not an affiliate. I'm not selling anything. I'm just telling you, giving you info. Go to AAII, right? There's the actual link, but AAII.com. It's a really good resource. A little annoying with how many emails they send, but a really great resource if you're a stock picker or love these stock screens, okay? And the exact Tiny Titans, the ones that pass the screen right now are there. You can get a free trial. I've done that. Or you can pay for it, which I don't because, well, I don't know, not worth the money to me. But it might be for you, and who cares what I think? Well, how good is it? There you go. Since 98, it's 30,624%. S&P, 633, and I did that myself. I didn't take that from the chart. I figured it out all on my own. With no dividends reinvested, that's 30,000 to 633, and that is a landslide victory. All right, well, how do we do it? Well, you go and buy or get your free trial, AAII, and go to the Tiny Titan screen. But how they actually do it is they run the screen and then they show the top 25. So if you have your own screen, which I've done myself, you take the top 25 that come up on the screen. That's it. And you buy equal positions of all. Then you run it again next month and you rebalance every month. So not only do you take the ones out that are no longer in the top 25, but you can, if it's exactly the same, you can rebalance it by just selling a little bit and adding a little bit here, right? For me personally, I don't love rebalancing, but I understand that it works. What I would do is just go through the top 25 and just kick out the ones that are no longer on it. As far as buying and selling and making all those match up, don't know if that's worth your time, but you can decide. Okay, what's the screen? Build it yourself. He wants micro caps. That's 25 million to 250 million. He wants the price to sales ratio in a deal value, right? Price per sale, is less than 1.5. You can set that up. And it wants the ones with the greatest 52-week momentum. So there's your scan if you want to set it up. And that's exactly what I did. But this chart that I showed you isn't exactly up to the minute. Now their scan and their Tiny Titans listing is up to the second, or up to the week anyway. But I started doing it myself. I love this screen. I love everything that O'Shaughnessy does pretty much. So I built my own and I tracked it. The first thing I did was I got my free trial, and at 11/29/24, I wrote down the top 25. Did not rebalance. I just wrote it down and have been tracking it ever since. Okay. Again, straight from AAII. And it was down. It is down as of making of this video, negative 8.52%. Now, it's been awful market, right? Market's only recently come back to break even. So that's not a surprise, but the SPY is up 3. So the SPY is up 3 and that's down 8. Well, that's not 30,000 to 600. I get it. But again, I built my own screen using exactly those parameters, and I did that on March 25th, right before the April meltdown. And my TradeStation screen, top 25, that's it, no rebalancing, is up. It just now started beating the market. The SPY is only up 8.19, but the Tiny Titans screen that I did is now up 9.6, and I think it's up again as of me speaking at this moment. Wow, that's interesting, right? Now, if you can go to AAII, here are the top 5 if you're curious, right? These are, I just did this, so there they are, AP, CISO, blah, blah, blah. Curious. They give you, again, if you join, you get all of them, right? And here's my top 10. Now, these are the ones that are winning. The other ones in the top 25 are losing, right? They're going to lose. They're going to go down in the screen. Lots of them are going to lose. They're micro caps. But here are the big winners so far, and those are the top 10. And you can see overall, all 25 are up 9.62, right? All 25 wouldn't fit on the screen. There's your top 10. All the rest are losers anyway, I believe. Okay, maybe there's one more winner that's break even-ish. Okay? The bottom line. So that sounds great. What's the problem? It's very, very volatile. You just saw it. Since November, it's down. And by the way, it's been down 20, 30% since November last year. Down huge. While the SPY is down, 5, 6%. The swings on this, because they're microcaps, are massive. And if you can't deal with that, you can't do it. Again, that's growth for you, right? And they can underperform for a long period of time. What's long to you? Months and months and months. Because small caps, again, are volatile. If the market goes down, it's going to go down more. If it goes down more, it's going to take longer to get back up. My Tiny Titans from TradeStation was deep in the red since March and only just popped up and started beating the market this particular week that I'm making this video. Okay? It looks like rebalancing might matter. Whether that's literally rebalancing everything, making the dollar amounts the same, or just kicking stuff out. I haven't done that. I'm curious to see without doing it. I'll run the screen again probably in 6 months. But it looks like that may matter, so keep that in mind. And what, of course, the upside? Well, do I believe that 30,000%? I kind of do, just by watching it only for the past 6, 7 months. Because it's volatile down, but it goes up in a hurry. I can absolutely see how this could possibly work over the long run. Again, we're talking since 1998, and this is only a few months, but it's kind of done what O'Shaughnessy said it was going to do. And of course, it's repeatable, especially if you build your own screen. You just run it and do it, right? And it gets you out, by the way. If you do decide to rebalance, you're actually booking gains, which is the best part of growth. Growth means nothing on paper, means everything if you take the money. And this rebalancing every month, kicking stuff out, you'll take those wins and book those. And I love that, right? And so does Eddie. Eddie loves using growth that you can actually touch and feel and taste. Though I don't know why you're eating your money. All right, Elite members get any code for free. No code in this video, obviously. I do have a dividend income program. I kind of like income more than growth. And that will go to December or longer, all right? Thanks for listening, everybody. I'll be back soon with another video. Bye for now.